Did you know that markets consolidate 80% of the time? So if you focus only on trend trading strategies, then what happens is that you will be out of the market 80% of the time. Worse still, you will be whipsawed 80% of the time as you try to predict when the market is ready to start trending again. Now, even if you do decide that range trading isn't for you, it is still good for you to know how to identify a range-bound market so that you can stay out of it. In this video, I want to show you the easy way to trade a range-bound market using the M.P.E trading strategy. If you are new to this channel and haven't gotten your free day trading guide that covers the M.P.E trading strategy, I will leave a link to the website to download it in the description down below. It is free, no credit card is required. Just enter your email address and it will be sent to your email instantly. Now, towards the end of this video, I'm going to show you how to guarantee that you will make money if you stick closely to the numbers, which I will break down for you. So make sure to stick around till the end. Because this is meant to be a beginner's guide kind of video, I'm going to briefly run through the steps involved in the M.P.E strategy to bring you up to speed in case you have not read it. But before I do that, please hit that thumbs up button and subscribe to the channel if you're new. We do many valuable trading tutorial videos such as this, so please check out the channel after this. To encourage you to pay close attention, we also do a giveaway worth $37 for our plug and trade trading package. Our plug and trade trading package will give you the indicators, additional trading, and even the hedging strategy that made us over $30,000. So if you wish to participate, then look for an emoji somewhere in this video. Once you find it, comment on what the emoji is. You can also find the full instructions in the pinned comment down below as well. So quickly, let's do a refresher on what the M.P.E trading strategy consists of. M stands for market condition, P stands for price level, and E stands for entry trigger. To take a trade, we need to go through each of these steps. The market condition must be right, we have to wait at a good price level, and lastly, wait for the price to give us an entry trigger at that price level. Now, if you look into the day trading guide, I recommend using the M.P.E trading strategy with the trend. It says that if the market condition is bullish, we should be looking to buy, and if the market condition is bearish, then we should be looking to sell. But as I mentioned at the start of this video, if we were to stick to just trading with the trend setups, you will be sitting on your hands 80% of the time. And I know many of you want more trades. So the next best alternative is to trade a range-bound market, which happens most of the time. We are going to be using the M.P.E trading strategy for a range-bound market. Then of course the market condition must be ranging. So let me properly define what a ranging market means. A ranging market is when there is a minimum of 2 touches at the top and bottom of the range. So if you see a range where the price has only tested the top or bottom once, then you should be patient and wait to see if the price is rejected the second time at the top or bottom. Often, traders would think that it is a range and start buying or selling on the second touch. And sometimes it works and other times it doesn't. It isn't high probability. Another tip I have for you is to look for a clean trading range. A trading range where the top and bottom of the range is very clearly defined. You want to avoid trading a range where the top and bottom are not too clear and there are many fake outs. So here's an example of a ranging market condition. As you can see, the price tested the top and bottom of the range more than 2 times. That fulfills the first step of the strategy M, market condition. Now moving on to the second step, which is P for price level. The beauty of trading a ranging market is that the level is obvious. Now that's of course assuming that you follow my advice of looking for a clean trading range. Unlike a trend following strategy where there could be multiple levels where price may retrace to, the price level for a range bound condition is simple. You want to buy at the bottom of the range and sell at the top of the range. I mean, what else could you do? So, we have taken care of the market condition, made sure that it is ranging with 2 touches on both sides of the range, found our price level, and now it's time to look for an entry. What we want to do is to watch for a candlestick pattern to time our entry. We want to see some form of price action confirmation before taking the trade. This could be a hammer, a shooting star, a piercing pattern, or an engulfing pattern. All of these patterns are covered in the free day trading guide. But the idea is that we want to watch for a reaction first. We don't want to be selling at resistance if the price charges through the level without showing signs of slowing down. When we get the confirmation, we can take the trade and set in our stop loss and take profit. Again, because this is a range play, your stop loss and take profit is easily determined. Your stop loss goes above the resistance or below the support, and your take profit target should be near the opposite end of the range. Now, be mindful of taking your profits earlier before the price hits the opposite end of the range. You don't want to be greedy and lose all your paper profits just because you set your take profit at the extreme end of the trading range. And that's the entire process of how you trade a range-bound market using the M.P.E trading strategy. Let me show you another example before ending off this video with how you can guarantee that you will make money by following this. So right here we have a trading range. And why is that a trading range? Well, that's because there's a minimum of 2 touches at the top and bottom of the range. So we proceed to draw our key price levels, one at the top of the range and one at the bottom. Nothing too difficult. Then we wait patiently for the price to hit either of the key price levels with a price action confirmation pattern. Once we see it, we can take the trade and target the opposite end of the range. And we do this until the range eventually breaks and we get a loss. So hopefully you can see that this is a straightforward way to trade. Just remember that a ranging market is categorized by a minimum of 2 touches on both ends of the range. Now moving on to how you can guarantee that you will make money using this strategy, I'd like you to consider the only 2 outcomes that can happen when you trade an established range, emphasizing the word establish. The first outcome is that the support or resistance holds, and the second is that the support or resistance breaks. Now, what is your probability? Well, I would say it's kind of like a coin flip, heads or tails, support or break. It's about 50%. So if you view it as 50%, then so long as you have a risk to reward of more than 1:1, you should be profitable. Suppose you take this trade right here with a stop loss of 100 pips and a take profit of 150 pips targeting the opposite end of the range. That's a risk to reward of 1:1.5. Sure, you might lose money on this one trade, but on balance, you know that if you are consistent and do not go for the low reward to risk trades, you will eventually come out ahead. So the mistake that many traders make is that they buy at the support and exit too early because, well, the price is pretty messy in a range. What ends up happening is that they exit with a small profit that cannot cover the losses. Hence, in the long run, they lose money. The right way to approach it is to insist on an excellent risk to reward, perhaps a minimum of 1:1.5. set in the take profit and let the trade either hit the take profit or stop loss. This way, with a 50% win rate, you will still come out ahead. The trick to making this work is to manage your risk and insist on an excellent risk to reward. Do not take low reward to risk trades. So summing up this video, I showed you how to use the M.P.E trading strategy to trade a range-bound market. A range-bound market is one where price bounces off the top and bottom of the range at least twice. Once you see that, plot out the key levels and wait for a price action candlestick pattern. To ensure that you will be profitable in the long run, insist on an excellent risk to reward and let the trade do its thing. Do not manage your trade and take small profits. If you enjoyed this video and want to learn more about the M.P.E trading strategy, I have previously uploaded another video sharing with you how to combine this strategy with institutional buying and selling. I will leave a link to that video at the end screen over here. Thanks for watching. I will catch you in the next one.